Welcome to the Accounting Guys YouTube channel. My name is Blake, and today we'll be talking about some of the best practices on how to adjust accounts receivable, as well as how to avoid some of the most common pitfalls with this scheduled account. Today we'll be hearing from one of our most requested trainers, Brian. He's a partner here at the Accounting Guys. Hope you enjoy.
Let's first talk about how you set up a customer. So in System and Customers, you can also do this inside of the different sales pieces of the system as well, but this is where we set up a new customer, and it's first going to take you to this general tab where you put in their name and their address information and other key information that you may want to keep on hand or run different reports on to create different lead lists. One quick thing, we'll switch over to this full view. After a customer is created, down in this bottom section, this will show you all the historical sales that they've had. It will also give you a little summary of what their balance is for what they owe. It'll tell you about the units and what service history has been done on that unit so that you can see more information regarding that customer. But let's go back to this general tab for just a second. So there's a couple of different filters or options that are in here that help with some other reporting aspects in accounts receivable. And you'll notice in Lightspeed, they do a good job at making sure that you understand what has to be input, which are the different red options. But here on this bottom right section under setup info, you can assign it a customer type. And so you can say if it's a different dealer, if it's just a regular retail customer, are they employees, is it internal accounts? And these different types can be set up under system and lists and customer types. But we have some options here that create a filter. And then as far as where things show up on the GL account, we're going to go inside of the charge accounts. And this is where you can set up, can somebody charge this on account? And so there's three different options here. You have no charge allowed, which means they can't. So they would have to pay cash, check, or card that day in order to get the product. Open item is what we prefer. What the difference between open item and balance forward, both of those you're able to charge to them. But on open item, when you do a sale, it charges it to accounts receivable. When they make a payment, you individually select that payment pays off a specific invoice. And so it keeps things very clean and it keeps their statements very clean. You might have customers balance forward. The way that I like to look at it is it treats it more like a credit card statement. And so it's going to take the most recent payment that you've received, and it's just going to apply it to the oldest invoice moving forward. And then after you've done your statement for the month and you have finished the archiving process, it's just going to say beginning balance, just like you would see in a credit card statement. So we tend to tell our dealers, and we suggest always use open item. It just makes things cleaner. You might use balance forward for internal customers, or if you have customers that don't care about their invoices and knowing how things apply or whatnot, they pay you every single month, you can do balance forward, but we suggest still doing open item. So once it's an open item customer, then down here in your credit limit, you say up into what limit are we going to allow them to charge? So we can say $5,000 is their limit. I'm okay with them having that type of a balance. And so one thing I want to point out here is you also set up lien holders as customers. So when you're going to finalize a sales deal and you have a deal from Freedom Road Financial that they're going to be funding for the deal, you might set up this credit limit. You might put it as $1 million, right? Because we'll do as many deals as we can through them and allow that to charge through accounts receivable. Over here on this right section, we have the GL interface, and this is where it shows up on your balance sheet. So we have this override AR GL account. So there is a default accounts receivable account, and that anytime you hear the word default, that's going to be listed under system preferences. And let's go over to accounting and accounts receivable. And here is the default accounts receivable account. This is the common default account amongst all dealerships is 22,000. And so if you want a little bit more detail on your balance sheet, not just sitting inside of one AR account, you could separate those by overriding this and then picking another scheduled account. So the most common one is contracts in transit. And so with all your lien holders, you'll want to come in here, override the GL and choose contracts in transit. And that will move the balances as of today for any balances that have been inside the system in the past. So this is how you set up a customer. So let's talk about what is accounts receivable, how does money come into it, how does money come out of it. And so accounts receivable is used for when you give a customer a product or you provide a service to them and they haven't paid you for it yet. And so in parts, service, or sales, you'll perform that sale, and when you cashier it because you've finished it or you've provided the product to the customer, you use the method of payment AR charge to charge it on account. Then once it's in here, that's where you can make adjustments in a couple of different ways. You can get paid via a memo. You can get paid via miscellaneous receipt. You can do a reversal of the sale to pull it out of accounts receivable. But the most common way you're going to adjust an accounts receivable balance is going to be through a customer memo. And so let's go ahead and go into this customer memo option. Up here on the top left, you select the customer. You can hit the customer button or double click into the box, and it will ask you to look up the customer. And then on the right side here, you have a memo type. If it's a debit memo, that's going to increase the balance in accounts receivable. If it's a credit memo, it's going to decrease the balance. And let's go ahead and see what customers we have balances on really quick. I'm going to do that by running an accounts receivable aging report. Okay, so here we can see Sheffield Financial has a balance. And let's do a memo to Sheffield Financial. In the middle of your screen here, this is where you can apply the documents. So we're going to hit look up, and we can see I have a sales deal here for $24,673, and then we have the finance income portion as well. So you can grab both of those. So you'll need to give it a number up top, and then the amount right here is for what we're adjusting. We're going to go ahead and do the total of those two balances. And then you have a description field. So you can say received funding for this deal, for this customer, from Sheffield Financial. Whatever description is going to best give you the information you need to continue forward there. So here along the bottom shows us the accounting entry where it comes out of contracts in transit, and then it has some different options if you use the write-off features up here, but we're going to just avoid those for now. Down here on the bottom, we have the bank account that it's going to be funding this money into. And so there are cases where the amount that you're reducing out of accounts receivable to clear that balance is different from the bank account. And the reason why a memo is helpful is you can go ahead and do the amount that you received in the bank, and then you can add a line here and you could adjust. For example, finance income is typically the most common adjustment for these, and make that adjustment right inside of the memo. And then you can hit save and it will make that journal entry. Make sure you pay attention to the date up here, as this is the date that the entry will take place, and you want that to match when it hit your bank account. And so we'll go ahead and hit save to clear that entry, go back to our aging report, and you can see when we run that is now cleared off and that's gone. So adjusting accounts receivable, if the balance is incorrect, you'll more than likely use a memo. Again, so a customer memo, you have two types. A debit memo will increase the balance that they owe you. A credit memo will decrease the balance that they owe you. And it will receive it into the bank account that you put down here in this bottom section. In another one of our videos, we discussed miscellaneous receipts, and that's another way for you to receive money from your customers and apply it to their accounts receivable to bring the balance down. The difference between a memo and that miscellaneous receipt is in a memo, you can go ahead and adjust the balance inside of this entry if the dollars or the pennies are off, but the people that are doing those miscellaneous receipts, they might not have access to accounts receivable. And so what you do to make sure that everything clears out, you might go into receivables, customer inquiry, look up the customer here, and make sure that you've got your sales, and then you'll have a miscellaneous receipt where you will apply the item payment that you've received to those individual sales. And so that's an extra step that you need to do when using a miscellaneous receipt. And let's say that somebody has misapplied something, they did it to the wrong items. Down here on the bottom, there's this unapply button. This is newer to Lightspeed. You might not have seen this yet, but it's super helpful, where now we can see I've got this item that still has a current balance, and I have this payment that still has a current balance, and now I can reapply them to each other. And so where our current balance is 0, everything ties out and we're good to go. There is a way for you to get all of this information in your screen to push back into the background, and you can always bring it back by clicking this include history button, but that way you don't have to continue looking at the items that you've already reconciled, and that is by archiving paid charges under receivables, archive paid charges. This is something that should be done every single month, But there's some specific considerations to keep in mind before you do this, and it has to do with the balance for customers and how it affects the statements. We would suggest reaching out to us before doing this step so we can take a quick look at your specific system, what customers you have there, and so we can tell you what the differences are when we apply and archive these paid charges. So that's it for accounts receivable. Again, just in a recap, to adjust accounts receivable, the way that the money comes into that account is typically through a sale. And then the way that you bring that balance down is by doing either a miscellaneous receipt or a credit memo. You cannot do a journal entry to accounts receivable. Hope that this video helped. Please let us know if you have any suggestions for videos. You can see our website information below. Feel free to reach out to us there as well. Hope to see you soon.